has been known as the death of the US dollar. And I guess there's no better way to jump into it today than saying, what is the power of the US dollar? And what are people referring to when they say that we're entering the era of the death of the US dollar?
Great. Well, firstly, I would say that the power of the U.S. dollar is really at the core of the U.S.'s foreign and economic policies. So two of perhaps our most important policy spheres. And that in those cases, when I say it's at the core of them, I mean it is even more important on the foreign and defense side than, say, military spending purely. And when I say it's even more important on the economic side, I mean that the dollar's relationship to the world and its position in the international economic order are at the core of what makes the U.S. economy work in its current environment, what makes the U.S. Able to, and some would argue need to, run substantial deficits, which of course many people complain about, but have real abilities to increase U.S. spending beyond purely what we have in our pockets today. And I think that's where it's really important to understand the power of money and particularly credit over time, right? Most people can think of a mortgage, right? It's an easy way to conceptualize it. You can buy a house with more money than you have to hand right now with a mortgage because it is believed you have good credit and the ability to repay that, and that then multiplies your spending power. Governments have the same essentially with their borrowing power, but it is even greater and on a far larger scale than sort of any one mortgage. And then, sort of from a foreign policy perspective, because the U.S. dollar is not only, which people usually mean when they talk about sort of its role, it's the global reserve currency. It's used in about 60% of global reserves held by governments around the world. But it's also far larger in terms of trade invoicing. Around a higher percentage of global trade invoices are denominated in dollars, excluding Europe, where the euro really dominates. It's around 90%. And then it is also the primary currency for financial instruments around the world. So although the dollar is a U.S. currency and its use brings things under the U.S. purview, granting it geopolitical strength, such as the applicability of sanctions and then secondary sanctions threats, which I'm happy to talk about more later, giving the U.S. sort of what's known as an extraterritorial use of those tools. But plenty of other markets around the world effectively create dollars. Dollars created when a bank issues a loan, for example, and the dollar is still the dominant currency in those around the world. I take the view that the U.S. is remarkably well positioned in this, and that I think that the greatest threats to dollar hegemony are largely from within, but it is certainly being challenged over the long term by China, and in the short term, albeit far less successfully, by Russia. And they have different aims in that, but the Russians in particular have seen how useful the dollar is to the U.S., at least in achieving its foreign policy goals, and how much of a hindrance it is to a country looking to overthrow the international order, not only its economic components, but other key components, as we see in the invasion of Ukraine as well, and where dollar dominance is really perhaps one of the greater Russian challenges to doing so.
What are some of the instruments that we're seeing utilized by some of these foreign entities right off the bat that are being used to kind of challenge the U.S. dollar, mainly with Russia? And I know, as you said, with China, we'll get into that a little bit. There's a longer, more strategic kind of approach to that. But for Russia specifically, what have we seen in the Ukraine war and from Russia to challenge U.S. supremacy?
So I challenge a lot. I draw a lot of the history in the beginning of the Russian-U.S. economic conflict back to a very technical development in 2013. I'll start with that because I think it's important for you to understand how well the Russians understand the system, also how robust it is, and then from there how much they've sort of spread. But the Kremlin has long chafed at sanctions, and U.S. sanctions in particular are effective, as I mentioned earlier, because of this extraterritoriality component, because banks that use dollars, which are pretty much every major bank around the world, have to comply with U.S. sanctions because of the U.S. view that anything involving a dollar brings it under its jurisdiction. So those have really began, and the Russians have long seen that as effectively an affront and a challenge. And a lot of this can be traced back to 2012 with the passage of what was known as the Global Magnitsky Act as part of a bill actually meant to remove old Soviet-era sanctions on Russia, but introducing these sanctions on only a handful of Kremlin cronies who had been involved in the expropriation of an investment management business called Hermitage Capital, run by an investor named Bill Browder, who's since written a number of very well-received books, including Red Notice, the story of this, and then one of whose lawyers was killed in Kremlin custody while being mistreated. And so he lobbied in Washington to have certain sanctions introduced on that, which were really just a response measure to his mistreatment. But as part of the larger geopolitical tensions that were going on and sort of the failure of the reset and the emergent conflict over Ukraine, Putin really saw this as an affront and as sort of an abuse of the U.S.'s position atop the international economic order. And the Kremlin responded in 2013, when the revolution was ongoing in Ukraine and demonstrators in Ukraine were seeking to oust Viktor Yanukovych, the pro-Russian president at the time, particularly over his extreme corruption. And I spent a lot of time in Ukraine there, including on the Maidan, and it was a fascinating thing to see for myself. But one of the key sort of developments in that was that while he was trying to hold on to power roughly 6 weeks before he was ousted, or 8 weeks before he was ousted, Yanukovych went to Moscow, incidentally on the day that the first demonstrator was killed by security forces in Kyiv, and signed a bailout agreement for the Kremlin to lend Ukraine $15 billion. Only $3 billion of the loan ever changed hands, but what was so unique about it was that it was an intergovernmental loan structured as a private market loan. And if this is something you're interested in, we can certainly discuss it more, but it gets into the real technicalities of government and sovereign finance. And the easiest point to sort of make there and digestible is that there is a different market for how a government adjusts and restructures its debts. There's no bankruptcy court for states, right? But occasionally countries get into debt trouble. And first they restructure the debts they owe to other governments. And then on the basis of that, on what are known as net present value terms, private creditors who have lent the government money have to accept a restructuring, at least on the same net present value terms, but often involving sort of more direct haircuts, sometimes higher interest rates. But these are two separate processes, but conjoined ones. Where China falls into that, for example, has been at the heart of a lot of debt disputes since. It wants all its loans treated one way, as commercial loans, not as conditional loans that should be treated differently, whereas the rest of the sort of international debtor community, and particularly in the West, wants Chinese debts treated the same as everybody else's. But Russia's wasn't about ensuring that it could be treated differently or treated more beneficially. These loans were structured to include a number of clauses that would give the Kremlin leverage over Ukraine in the future, including what was known as a no offset clause, that other debts couldn't be offset against it, that it could force Ukraine into rapid repayment if its debt to GDP ratio exceeded a very low bar, and a handful of other measures there. These bonds tend to be written under New York or English law. In this case, it was under English law. So this is really using a Western financial instrument to try to gain leverage over Ukraine and potentially to be able to block its restructuring and future both government and private creditor aid in the case that it sort of went against it. And this was the Kremlin really trying to use the international economic order to its own advantage. However, the strategy failed because a year later, the IMF, the International Monetary Fund, adjusted its rules. They say it wasn't political, but I always point out that they put out the press release in two languages, English and Russian, and Russian isn't a normal language. The IMF puts out its press releases, or at least when it does, it's in multiple other ones as well. So they sort of had adjusted their rules, doing something that's called lending in arrears to a country that it was technically behind on payments to official creditors. The Kremlin was, really outraged about this. But at the same time, in between, the revolution in Ukraine had succeeded. Russia had begun its first invasion and taken Crimea and invaded in the Donbass in the east as well. But the U.S. responded to that with real sanctions, also ones that crucially targeted the credit markets, what were known as sectoral sanctions, ultimately introduced by Europe as well, if slightly less wide-reaching. And these barred loans to Russian companies who are named. So Gazprom and Rosneft, the Russian state gas and oil companies, were affected in slightly different ways, but they went from being huge borrowers on Western private debt markets to rapidly seeing that decrease, in Rosneft's case in particular, all but cut off entirely. The Kremlin then responded by really taking its economic agenda internationally and looking to do a whole bunch of other efforts to try to destabilize the dollar system or to challenge it, both in the short term and the long term. And these had a very mixed track record. Sort of the one of the sexier ones, or ones that is kind of more out there, if you ask me, was an attempt to help Venezuela create its own cryptocurrency called El Petro that collapsed. Others were involved in ensuring Russia had access to sufficient gold assets and at least debating potentially moving Russia to a gold-based system rather than a dollar-based system. That involved Wagner, the private military company, taking over gold mines in many African countries, as well as debates in the Kremlin about moving to a gold ruble that never actually went anywhere for reasons we can discuss later. I don't think a gold standard system is feasible in the current environment, but as well as real crucial building new alliances in the energy sphere that would give Russia more leverage in the future. In particular, oil plays a very large role in the dollar system. I think it's slightly less important now, but historically the petrodollar and sort of the use of dollars by the rich Gulf countries has often been a large factor in this. But Putin, of course, went and helped create OPEC Plus with the Saudis. A lot of people forget that the day after Trump was in Saudi Arabia for his, quite ridiculous sword dancing and orb touching first foreign visit in 2017, that MBS actually the next day went off and visited Putin in the Kremlin and was already sort of playing both sides. But as well as some real successes in gaining leverage over that in Europe, both driving wedges in between sanctions and ensuring European sanctions were less wide-reaching, as well as building Nord Stream 2, gaining more control of refineries in Germany and elsewhere, crucially in India as well. Ones that had less of an immediate challenge to the dollar system, but were meant to insulate the Kremlin or at least raise the costs to the U.S. and to other Western partners of imposing the kind of major sanctions on Russia. I think it's worth pausing there for a minute, and we can discuss later how this conflict escalated after 2022 and sort of the major steps taken by the West, in particular in response to Russia's invasion, the full-scale invasion of Ukraine then. But that gets to the heart of, and sort of that difference in that build-up in international competition gets to the heart of why the global macroeconomic impacts of Russia's first invasion in 2014 were relatively limited, whereas the macroeconomic impact of the invasion in 2022 was so large.